Wonderful good day, ladies and gentlemen. Commodity TV out of Munich today here, and with me here is guest Mr. Björn Paffrath. He is an advisor to several resource funds, and also he's co-chief editor of Cashkursgold.com, a very well-known resource newsletter here in Germany. Björn, thanks for taking the time. You have been traveling a bit in the last months, and yeah, we want to talk about the markets today a bit and also about your travels, as I think you had some very good experiences with site visits also, right?
Oh, that's right. Thank you, Johan, for having me again. Yeah, the last couple of months were really exciting. I mean, we have seen almost hopefully the bottom, the end of the last year, bombed out sector. We took the time. I mean, we never stop researching and visiting the companies and looking for good opportunities. It appears to be a good opportunity maybe to start looking at the sector again if Dow Jones and the DAX and the other indices look a little bit toppy to me. So the risk is a lot higher now than to turn your eyes to the resource industry, especially in the mining sector. We have seen another plus 50% downturn in the mining stocks, even in the large caps last year. And I think after 3 bad years in this sector, it's time for a recover. We have seen that already at the beginning of the year, where gold is going a little bit more stable and even up, and that gives a good push to the mining stocks. But you never know, it could be a bear market rally. You have to be very careful not to get too enthusiastic about it. But of course, we have done a lot of work again in the last couple weeks and month to check out new stories, see the mining companies, check them out. And so we had, I think that was end of last year, we went to Montreal to the GMP conference. GMP is a big broker. They had a gold and silver conference there. The usual larger caps were there. We had another chance to talk to the management at that time. To whom
have you spoken there?
Oh, we have seen all of them, right? The big ones. It could be a Rio Alto and other silver companies. Yeah, Torex, mid-tier companies. They have been there. And of course, you have seen a Gold Corp, an Agnico Eagle, Osisko. Yeah, I think the program can be downloaded on the internet. It's a big variety. Some copper companies, of course, the big ones, First Quantum, the Lundin, the Capstone. Actually, who had a close watch to the copper market, could have seen them even since last year, June, a big gain in these stocks. Even Capstone almost doubled, and also the big ones, Lundin and Hudbay, for example, did a good job with regard to the share price, and they advanced their projects, and so that was interesting. Yeah, I would say the people were still not laughing. They had still a problem with the market. Of course, the stocks were down, and we were checking it out if they were okay with their cost controls. Management changes came in place, of course, and hopefully, finally, the shareholders like us and get a better performance this year, and when companies really focus again on their controls and hopefully on their stakeholders.
Have you been also on some mine sites during that visit?
We had a good chance combining this because it was Montreal, it's in Quebec, and so we could go and see some of the projects for Gold Corp. That was the Elionor project. It's already
the big one, right?
Yeah, it's already in the building phase. As I brought a couple pictures and videos. It's a $1 billion capex, but it will go for 600,000 ounces a year. Wow. Almost done. Interesting story how it was discovered by some exploration guys who found this project. Actually, it was in Virginia mines before. They took a nice royalty, so that was one of the companies and the smaller companies who really were stable then, because they get this big royalty out of it. But it was interesting again to see how much effort it takes to bring a couple grams gold out of the ground. So that was a very interesting site visit to see how this project is getting built. Frank Holmes' was with us, and some analysts, of course. So we had also took the chance to talk to industry experts. And another day we went down to Agnico Eagle's La Ronde mine, about 3 kilometers in the ground, also an underground mine. They did a
fantastic... That's real underground.
Yeah, that's real underground. It's getting hot down there. And so that was really interesting as well. La Ronde, they're doing just the extension to go even deeper. We get a very good tour here from the managers, and that was an exciting one as well. We combined it because Osisko's Canadian Malartic mine, open pit in this case, is not far away, an hour by bus, and we were able to see this big open pit mine, the big trucks, the big loaders, and also from Sean Rosen, the CEO, was with us. He gave us a good idea what the project is worth, where they're going in the future, and obviously Osisko was interesting to Goldcorp as well. We saw on that
they want to buy it. Goldcorp wants to buy it, right?
Goldcorp made an offer actually at a kind of cheap price. I mean, the big ones are taking advantage now and trying to get the project. We will see how the shareholders or the management reacts, and I wouldn't be surprised that it goes away to Goldcorp for a little bit more. But I think the industry is taking advantage of the cheap opponents and will buy them out or make offers, and that was really interesting site visits we had there. Good experience again to check them out, as we have them already covered in the letter as well. They're in the portfolio, of course, in the big funds. They're also core positions, and they gained quite a bit since then. But that was towards the year end. Combined to, in contrary to now in January, the conference in Vancouver we were
You've
attending.
been at Cambridge House, right?
Yeah, the usual conference at the beginning of the year is the Cambridge House in Vancouver. I mean, that's the old fellows we know, the companies we see every year. I would say the survivor companies, we saw a couple good ones, even a couple smaller ones we wanted to draw our attention with. I mean, last year you could make quite a bit money investing in the diamond sector. I mean, Mountain Province went well, Lucara, they really gained market share here. But also we had a nice talk to DNC, from Diamcor. They have a project. Tiffany is a partner here, going into positive cash flow, making enough money.
They produce in South Africa, I think.
Yeah,
right?
exactly. So it is really still an interesting sector, as we have not so many mines there. It's about 15, 16 mines, and they're closing down in the next year, a couple of them. So the diamond sector is a risky business, but remains attractive. Also the uranium sector, as I said last year already, is gaining more and more attraction.
What companies have you seen there?
I mean, you see the bigger ones like Chemica, Your Energy, Denison, you talk usually too. But of course, very interesting was again to revisit Fission Uranium, the most known company in this sector. I mean, the exploration stage at the moment, but they keep finding high-grade material in the Athabasca Basin.
Yeah, they drilled yesterday the best hole ever.
Absolutely, they're coming out with new holes, and this, one seems to be better than the other. So they were well known also for their takeout of Alpha Minerals. They take over the opponent. Now they're about 300 million plus market cap, which is quite high for a company with no resource, someone would say. But if you kind of think there is maybe 60, 70 million pounds uranium potential, and then going maybe to 100, possibly if you take a look at the last takeovers, the River Buy, then you can calculate around $10 for the pound in the ground. That would give them maybe a calculation about 600-700 million market cap, whatever they come out now with their first resource calculation. But there's still room in the stock. Did already very well, but I think this is the most known story out there. Smaller ones who profit, of course, could be an Azincourt, for example, who has their project up there and is going to buy.
It's right, the partner.
Absolutely, they partnered with them. I know the management also very well. I think there's another chance to speculate a little bit. And then there's not so many companies out there in the uranium sector you want to put in your portfolio. So it's an easy entry for people who think this sector could be booming in the next years, and it will. If you look at the reactors, nuclear power plants, they're going to be built. So this was one of the sectors we had a look at. Then for
So you would say the atmosphere was much better now at the Cambridge House in general, and let's say, yeah, it was better than last year even, I would presume.
Oh, for sure. I mean, people get a smile on their face. The market came up a little bit. It's not sure if it's really holding up. As I said, I'm thinking of a bear market rally here. But in the long run, positioning and yourself as an investor in the right companies could go very well in the next years to come. And I think even if you see the performance of some of the shares in the last weeks, they gained quite a bit. And if you take advantage of these short up runs, then you already make your money and keep in being for the long run, investing in good companies. As I said, you look at some themes like uranium, diamonds, even special strategic metal like tungsten, which we like as well. We had a nice talk to Jim Robertson from Blackheath Resources, of course, in Portugal. We know they may be cold, but I better like the Blackheath guys. Jim Robertson has a big experience of what he did in the past. Primary Metals is a well-known company. A couple of years ago, he sold it to a Japanese conglomerate for big money. Then he was also involved in Riverstone, now True Gold. This is really management we like. He gave us his strategic outlay. The project has to be drilled, of course, but it's a fantastic setting. The Chinese money is now coming in the last placement. So I'm very comfortable with this stock. Very small market cap, only 70 million shares outstanding. So it's a really small one where you have to be careful to put too much money in. But if you look at tungsten, it's worth a look, I think. It's another topic we liked. Of course, copper, as I said, worked very well the last half year. A lot of stocks did well, but most of the copper producers have also a zinc component. For example, Hudbay, now bringing their Peruvian project Constancia. It's a big one in production the next years. 30% is zinc, and zinc will be another topic, another theme I like for the next years to come. It will be in deficit, so something we want to look at it as well. And of course, gold and silver is.
That's what I wanted to touch now. Yes, gold. What did you? What companies have you seen with gold? To whom have you spoken? What do you like? And especially, you said already Peru. Something special about there?
Oh yeah, we have, of course, the big caps. You know, I mean, we all know the problems Barrick has and the big ones have. They are changing now. If you want to have a general portfolio of gold and silver because they were upbeaten the most, I would say find the good ones. You also can buy the index, right? And you have no risk with the single stocks. You combine it for the regular investors. But if you look for specific companies, then you should shop around. I mean, the mid-tier is really nice, interesting stories. I mean, Timmins, cheap. You have to look it up if everything is okay. You have to take your time to read through the financial and make sure everything is in order. We spoke to Timmins management.
Timmins Gold.
Timmins Gold. Bruce is a very well-known man in the industry. Timmins Gold had a good audience. They were covered by a lot of analysts. They came down a lot now. Stock is about 150 now. So they did a bought deal with RBC to come down on their debts. A lot of people didn't like it. I personally like it. If a company is focusing on bringing down the debt side, we never know where the gold price will go. Maybe it goes up, but it can be also going down the next years.
That makes the company also safe because you can't come that toughly under pressure then.
You want to find companies who make it already in an environment with $1,100 gold. If that happens, I don't believe that it will stay a long time down there, but it can. So we never know where it's go. And all the analysts saying it's going there or there, I mean, your guess is as good as mine anytime. So we don't know it really. And in the end, we want to look for good companies who can survive or even a lower cost environment. And there's for sure that companies taking care of their debt, controlling their asset. Timmins has only a single asset at the moment, but this is something I really like. And Nefson Resources I really like down Africa. It's a little bit risk in Eritrea, but huge potential. Gold, copper is now going into copper phase, and with over 200 million in the bank, they are actually ready to take another project on. Then Sandgold, for example,
Canada
a known producer, a little bit on the costs concern, but I think if they get it going and reduce their costs, as I heard they will. Very interesting story. We have already a producing mine here, and obviously the share price gained quite a bit from the low. This is one story I really liked seeing there. Then others, of course, in the silver space, the usual fellows we know, but aside from that, I think Santa Cruz could be interesting again. We will have a closer look at that one. This is kind of the space we liked. And Peru, of course, is a very high profile topic at the moment in the industry because everyone wants to be there. It's kind of the country everyone likes. And
you found somebody there also?
We always follow smaller ones, of course. I mean, as I said, Herdbase Constancia lies down. A small one we always spoke to the management is really Inca One. They only 5 million market cap. That's not a big one, but they already proved the model that they can produce because there is a big tall milling company called Dynacor. They have their own projects in mind, but what they do is actually they buy ore from all these little miners, and the environment in Peru, the legal side changed. Everything has to be legalized now. So the small miners, some are legal, some are illegal, have to formalize, get legal, and they have to find someone they can sell their ore to. That means they need plants or mills where they can be treated, where the ore can be treated. And Dynacor really made a great deal out of it. The stock is near $2. $80 million market cap around, and that's where Inca One focused on years ago when we met the management first, and that's not the usual CEOs who did like a lot of companies. That's business guys who come from a different angle.
Real entrepreneurs.
Yeah. Absolutely, we liked what they did. Everything they said they make, of course, they made happen. Of course, the money is a problem at the moment in an environment where companies are not getting financed. It's hard to get the money for, but I've seen the project. And they made it happen. They're producing, they're ramping up their plants. They can add one mill after another, buying ore, and there's unbelievable grades in there. When you think about underground 8, 10 grams or 12 grams reporting companies, or open pit, even though Cisco has slightly below 1 gram, and they can buy ore for an ounce a ton, 1 ounce to 1.5 ounces.
So real high grade.
That's absolutely high grade. So just treat it, make money with it, and that's what Dynacor did, and that's what Inca One will follow. And suddenly now this year we see a lot of other companies trying to enter this market, going in this toll milling business, meaning only treating ore for others. That was not something that was liked in the past, but now it's the flavor of the year. I would say companies that make money, that have cash flow, that have no debt, that's something we look for, even if they're small. And if I look at the amount of companies now trying to take advantage in Peru, it's ridiculous, because a lot of them will put it on their presentations and they don't have even the right network down there. So the really good thing,
you have to be established, right?
It's absolutely important that you have the right people down there in the country, that you work with people you trust. And as I said, I be several times a year down in Peru, and I've seen also these guys, and I think it's worthwhile. And if in the smaller space people want to look at something, I think there's only one name, and that's Inca One. I go for, and I can just encourage everyone, make your own due diligence, because it's a small cap. Go talk to the management, and as I said, for our letter we only treat the big caps, and that there you can make enough money for a regular investor, but whoever wants a little bit more flavor,
a bit more salt in the soup.
A little bit speculation in the junior and exploration sector is sure worth looking at. As we know, the risk is increasing. For the young companies, pure exploration, I would stay away at the moment, because they only have to drill. They need the money for it. If they find something, great. If not, the money is gone. If you have a junior, like a mid-tier producer, you already know there's cash flow. They could need more money to expand, but at least they will survive. A couple of them may be hedged, not a lot of them, and that's what I really criticize, that no one hedged at 1900 gold, and they think it's going through the roof. And at least encourage the companies to hedge a survival mode. That's very important.
Some costs.
Altona, for example, did it very nice. Australian copper producer who produces in Finland, and they hedged gold. They made 5 million out of their gold hedge when they closed it down here. And that's interesting, and that's what I like. Of course, companies like a Mandalay were also out there at the conference. Very good team, very good management.
That's pay dividend.
Yeah, absolutely. Paying dividend, that's what you want to look at. If you get a good dividend at that rates, but that's not my main focus. I mean, companies with 1-2% dividend I don't like too much, because that's almost nothing, and you rather invested in the project and in the mine. But when it goes to 4 or 5%, that's really interesting.
Exactly.
Of course, we talked about a little bit on the potash side. We had all this turmoil going, so we talked to some potash companies again, how it is going there. And yeah, the whole conference was really interesting to talk to, but it's more important for me in Vancouver. It's the heart of the industry, like it is Perth in Australia. Of course, we have Toronto then in March upcoming. It's important to see what the people are doing, who is surviving, and getting a good feeling if the investments are still in shape.
Great. Björn, thank you very much. It was very comprehensive, very informative. Thanks for taking the time being here, and also thank you very much for your wonderful material you gave to us with the video. We will do some of your site visits. We will present them on Commodity TV, and yeah, keep it going, and we look forward to hear very soon from you.
Perfect. Thank you, Johan.
Thank you. Ladies and gentlemen, it was Björn Paffrath. You heard it. It was really a lot of information, a lot of companies he spoke about. Take your time, make your due diligence about it, and it looks like 2014 is getting better. And of course, as I said it already, he was so kind to give us his video material, and we will cut out of this some very nice site visit videos so that you really see what is going on in the large mines in the world. Thanks, and bye-bye from Munich.